Let's actually ask an analyst who tracks HCL very closely, Sarabjit Kaur Nangra of Angel Broking. Sarabjit, good having you. Thanks for joining in so late. What will the impact be on HCL Tech's earnings warning on the stock tomorrow morning?
See, the warning that HCL Tech has given is just a warning to give the effect of the currency on the overall performance of the company in the coming quarter. And also a warning, which is most significant part of the warning, was the client issue that they have pointed out with respect to one of the multi-million-dollar contract for which they expect to provide a provision this quarter, though much details are not available whether this contract is moving out of HCL's basket or whether they will be some kind of a loss that they have to provide, or what kind of liabilities accrue in the short and the long term. But I guess that is more negative. And in terms of currency, they have already said that in terms of US dollar, the impact will be the extent of 80 bips. So I guess that's what it is. Currency, we are not making too much noise about it, because I think that was known during the quarter that majority of the currencies have depreciated, so that impact would have come in. The only thing was negative was the client issue, but and that needs more clarification. So I guess in quarterly numbers, the volume number for the quarter and for the year will decide whether from where this stock goes on. In terms of our current recommendation is a buy recommendation. So we believe there will be some pruning happening. So I guess it will become an accumulate max to max. So I guess that's what we have a take as of now on HCL Tech.
Sarabjit, if HCL is sort of flagging off the fact that it's experiencing some client-specific problem, should we be looking at something that we could see more companies, in the same space do?
Our call is that cross currencies, as you pointed out, is a headwind which most of the players will be facing, and it's not specific to one. So obviously 80 bibs what HCL is given is because of the basket at which it's operating, and hence its impact on the company, whereas other companies, to the extent their exposure to dollar and to the extent that they export to other regions, will have an impact. So I guess most of these companies would be facing cross currency impacts, and hence their currency numbers will be impacted. But I guess being in IT, we look at volume growth majorly apart from currency, because that's constant and currency movements keep on fluctuating during the quarter. So I guess in terms of least impacted, I guess Infosys, and rest of them will be impacted to the same extent somewhere here or there.
Certainly, ahead of the earnings season, what's your view as far as the IT sector go? And in that light, what would your top picks there be?
As an IT sector, we are positive on the space as it is, because we believe that the profitability of the sector and the valuation at which it's trading, there's a huge gap, and definitely the sector warrants decent valuations from here on. And the only reason the sector is not getting those valuations is because of the volatility in the currency and because of its impact on the numbers. But overall trend, if I have to look at, IT is another huge export oriented industry like pharmaceutical or other industries, and depreciating rupee definitely makes rupee revenues and hence the profitability higher for any IT company actually, because majority of part of their revenues are booked in dollars. So I guess given the profitability, and given that if the volume growth is not impacted because of what's happening globally, I guess that should make a case for a steady returns in the sector. So we are overweight in the sector. Our top picks right now is Infosys and TCS and Tech Mahindra, and we believe these are the stocks which will benefit out of the majorly in terms of exports of IT sector, and the valuation comfort is there more than this export story which is known to everyone. It's more to say that these company has been able to grow faster, better, and manage their profitability. So these are our picks in the space where we believe there is a scope for stocks to reward shareholders. So these are our 3 picks in the space.
Okay, Sarabjit, thanks a lot for joining in and giving us that perspective. Well, HCL Tech has cut their quarterly growth forecast, and Fitch has done cut India's growth estimates really for FY15 to 7.5% from 7.8%, citing growing global pressures on emerging economies. Fitch fears stalled reforms may take a toll too. That's coming up on the other side.